Welcome back to Ferocious Education. Today I'm going to be talking about naked brand groups, going to ticker NAKD. Make sure to drop a like to this video to help the channel grow. Subscribe and leave notifications on. I covered this one multiple times before. You'll find it in my description below. If you'd like to join our Discord, that is totally free to ask me more questions. You'll find that as well in the description below. So let's jump right into this one. I've broken this video into due diligence and then towards technical analysis. Due diligence part, I'm really going to go ahead and discuss some of the latest updates, including mainly their focus towards the e-commerce section. So if you haven't heard and if you haven't watched my previous video, so naked brands have gone with multiple different types of offerings to basically eliminate all their debt or have enough amount of money to eliminate all their debt. They do have their compliance there. And they're also restructuring to exclusively on accelerating existing e-commerce platform. And what that brings in ahead is the potential for utilizing the e-commerce sector. So we need to look at this one here from the PR from January 21st, 2021. Building a dominant e-commerce leader focused on intimate apparel market leveraging growth and synergies through marketing, M&A, and investing existing fast-growing e-commerce operations, and as well divesting unprofitable brick-and-mortar operations. Consumer trends rapidly are evolving away from brick-and-mortars and expected to represent 22% of the global retail sales by 2023, or $6.5 trillion. That's the e-commerce itself is expected to be reached there. So that's a lot of money that they're really trying to go for the digital world. And what they're doing here recently, including their recent private placements of things like investments, etc., and offerings, definitely do pave the way, and they do mention it here. For instance, they say here the company believes its recent capital raising activities accelerates its transition to pure play e-commerce platform for business. And that's a really bullish thing that I wanted to talk about before going on towards institutional buyers. You get to see that on the 11th, we get to see that 10% was bought by Asosa, and then that is basically one of the latest investments just yesterday. That's a massive investment there. It's 10% of the entire company. Institutional buyers have been not very active with this one. And the question comes in, will we see a short squeeze onto this one? Well, before I do mention that, they do have experience with e-commerce. So for instance, this is one of their companies underneath. And they do have, it looks like it's actually active. Like this one, a sweet piece of pie, 3014 offer, etc. This is active. So they do have an e-commerce platform. And they do have experience with e-commerce platforms, generally speaking. Now, the board of directors here, they don't have a chief technology officer, for instance, but they do definitely have one of the managers here, general manager towards technology. Right here, general manager, technology and transformation. And they do have basically experience with HP and other companies that might benefit forward towards technology enhancements for their e-commerce platform. And it comes to the question, do you think this one is going to actually go ahead and see a short squeeze? Well, the question with this one is the short interest, I believe somewhere around 10% currently. If we were looking into the short volumes itself, they're sitting at 30%, 20% per day. So it's definitely increasing there. But in terms of short squeeze, it is possible. Although I definitely think that this one would rise ahead towards being a good investment, or more, it's not a really good investment, more of a speculative investment for a second chance for investors that they do love giving companies like this where they go fully digital and can see growth in value as we go forward. And we get to see here on the upcoming events, we don't have any new ones, but very excited to see a bit more about their e-commerce platform movements and growth towards there. And this company is officially looking like it has enough money to pay off all their debts. So that's a really bullish thing, and we can move on towards technical analysis. Before moving on towards the technical analysis, please make sure to subscribe and notifications on. And if you'd like, you can join our Discord. It's totally free. You can ask us more questions, etc., and more to clarify and other stuff. So on 1 week perspective here, what we get to see is actually within the trading action zone between the 10 SMA and the 30 EMA. That's really bullish. The trading action zone where positive reverses are likely is between 95 cents and 63 cents. And we're looking here on an 80x that does show it's a little bit overextended, and we can expect a bit of pullback, and we've seen that from 340 all the way down to almost $1. The MACD is looking like it might attempt a negative reversal, so that's a little bit dangerous. We need to look into a one-day perspective. Now, on the one-day perspective here, things are looking a little bit better. We're seeing that on the MACD, we're attempting a positive reversal here, going to the positive side sometime next week here. Momentum is a little bit sloppy, ADX is a little bit sloppy, and willing percent R is a little bit around neutral, but the moving averages here are all touching, and we're seeing a bit more of an accumulation rather than a drop. Now on the moving average band, we see that this one is expected to trade 121 at the top, 110 in the middle, and 99 cents in the bottom. And then taking a quick look into stochastic fast and stochastic slow, what we're seeing here is that it's attempting a positive reversal into this one here, and then moving on towards accumulation. Accumulation isn't something bad at all. Fibonacci retracement shows significant supports at 85 cents here. Now significant resistance are $1.34, $1.73, $2.13, $2.69, and $3.40. Going on towards just price line actions, we get to see that there is currently significant support sitting at the 98 cents, following that 86 cents, and then following that 75 cents, 57 cents, 36, and going to 31. Significant resistances are as follows: $1.04, $1.22, $1.36, $1.51, and going up to $1.86. Comes to the question to Ed, what do you think about this one? I definitely think if you're trading this one, you might be able to get a really nice bounce out of this one because they're going on towards e-commerce. They have enough money to pay off entire debt fully. In terms of investing, this one is definitely a risky investment, but it has potential. It has continuously lost money previously, and so for an investing purposes, I think this one is a little bit of a risky place, but it might have good opportunities later on in terms of making you some serious bucks. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.